Welcome back to the Corporate Sustainability Education channel. We are your weekly education podcast. We stream every Friday and we're powered by the Southern Sustainability Partnership. Now, in these series of podcasts, we try to bring you what's happening out there in the sector. We bring you the products, the technologies, the services and innovation where we can find it. But obviously we understand that this is for your corporate sustainability strategy, but somewhere along the line you need to budget for it or you need to finance it. So that was why we were absolutely delighted when we had the opportunity to bring you a podcast that was specifically on sustainable finance. And to do so, we're delighted to be joined once again by Martin Baxter, who is Director of Policy and External Affairs at the Institute of Environmental Management and Assessment, otherwise known as IEMA. Martin, thank you so much for joining us again.
It's a pleasure to be with you again and an exciting topic to be covering in this session.
Absolutely, we're so glad that we're covering it and we're so glad that it's you that is doing so for us, so thank you. Martin, the sector that we both find ourselves working in is progressing at such a pace today. So it must be fair to say that it has the ability to put some impressive numbers into the Treasury.
Yeah, I mean, I think there are two things. So one is, as the sector, the technologies that are being developed and, and being put into business, and clearly they are, they become, thriving businesses in their own right, and therefore, profitable, and therefore, are making a big contribution into the exchequer. I think what's also really interesting, though, is that, sustainability needs to run through the whole of the economy, and we need all businesses to be sustainable and putting in sustainability measures and being on that net zero transition. And I think that is really important, because that's going to make those companies more resilient to the changes that are coming. Also, they're going to be investing in those technologies as well, and deploying the technologies from the sector. And so that's where I think we have the ability to make a much bigger contribution to the economy. I mean, effectively, what we want is sustainability to run through the whole economy, and for that to be profitable, and therefore making contributions into repairing the public finances, which through the COVID pandemic have been absolutely hammered. So I think that's really good. There are some, the sustainability challenge does pose some really interesting challenges for the Chancellor as well. So if you look at the government's policy now on electric vehicles, for example, means that over time, the 29 billion pounds a year that is paid in fuel duty, typically, kind of maybe COVID pandemic year, isn't going to be there. But they're not going to have 29 billion if, the rapid take-up of electric vehicles. So somehow the Chancellor's got to think about where else is that money going to be found? Is it going to be from different forms of environmental and green taxation, carbon taxes, or is it going to be in other measures that they might bring in as holes start to appear in the public finances from the transition to a low carbon economy? So I think there's the whole sustainable finance from a government perspective is really interesting, and then we need to kind of understand well, how does that work for individual businesses? How do they build that into their own investment plans and internal decision making? So yeah, really interesting.
Targets is a big word that we hear when it comes to carbon reduction and saving the planet. We hear it every time the media covers something. Very often it is looking at targets. Governments around the world set targets. Our UK government clearly has set their own targets. If they've got targets, they in turn have to come to us to to help them to meet these targets. So obviously anything that happens needs to be invested in. So there must be financiers out there that are absolutely hungry to get these deals going.
Definitely, and I think there's been a huge change over the last couple of years in the way in which the finance sector and financial services are now viewing the climate change and the transition to a net zero future. So I think, a couple of things to note. Firstly, in the Chancellor's recent statements, he announced that the Bank of England's mandate, and the Bank of England obviously regulates through things like the Financial Conduct Authority, the whole of the financial services sector, and environmental sustainability and the net zero transition have been written into the Bank of England's mandate. So immediately now what we're seeing is the financial community looking to see what are their investment portfolios looking like, how well are they aligned to the Paris Agreement, and where are they going to choose to put their money. A little insight was that I thought was really interesting was at the start of the pandemic, as the economic tsunami was hitting as well as the health one, is that sustainability investment portfolios outperformed others in the market. So the finance sector saw that actually investing in sustainability in those organizations that were going to be climate resilient generally were classed as being lower risk, and therefore at a time of great change and uncertainty, that was where the choice money was going. And I think we're seeing, that's a really important factor in financial decision making and financing decision making as well. I think so that's really important. I think though there's a bit of complexity in terms of how we're going to finance this transition, because if financiers say we don't want to invest in bad stuff and we're going to move our money out really, really quickly, we only want to go into the good stuff, then how are we going to move the majority of the economy from where it is now to being net zero in their own right? And therefore what we really need is that the financiers are going to finance the transition to a net zero future. So what we need is them to really understand what are the, how do you take a company in a particular sector and what's that company's transition plan to a net zero future, and then is that and if you have that, then I think that's when money will flow in to finance that transition. I think companies that don't have that kind of internal plan and that's aligned to the bigger picture in terms of moving to net zero and other environmental factors, then that becomes more difficult. I think will become increasingly difficult to raise finance for those companies. So I think that whole movement is rapidly taking shape. What's also interesting is government is in the process of developing what they're calling green investment taxonomy. So they're going to start to specify the types of companies or the types of business activity that are classed as being green and sustainable and consistent with our net zero future. And what we would expect to see then is investment portfolios saying, what proportion of our assets under management and investment are kind of consistent with this taxonomy. And that will then determine choices for people kind of in making investments, but also then that also shows the way in which companies are going to be responding. So I think there's a lot happening there, and it's really, it's in its infancy in terms of having all the metrics right to play into the financial services sector, and for them to really understand climate and environmental risk and to be able to take the environmental and climate risk data into their financial decision making, but it's on its way. Definitely, we're seeing that. So I think that's really exciting. The third thing I'd just mention is that government has announced that task force on climate related financial disclosures is going to be a mandatory requirement for companies in the UK. And that will look at, what are those long-term plans that companies have in their strategies to move in the direction of net zero, but also managing their potential risks to, the policy and technological developments that are coming. And secondly, also looking at physical climate risks and thinking, what does that mean in terms of impact on asset valuations in a company, on income streams, and that. So that's also on its way as well. probably, by way of example, if I, 5 years ago or whenever it was, government announced that unabated coal-fired power would be illegal in the UK from 2025. Okay, so if you've got an asset that you think, a coal-fired power station that you thought was going to be burning coal and generating income and profit for the next 20 years, that policy says actually you are going to either have to find a way of capturing that carbon, or that asset will no longer be able to operate. So then somebody who made that investment is going to suffer a loss. And therefore, the question is, what's that loss and what's the scale of that loss? And are there hidden losses in our system that might, or hidden risks in our system that might crystallize into financial losses? So another example might be, if you think about an electric vehicle, and if it's a battery electric vehicle, they don't have exhausts, they don't have catalytic converters. So if you're a manufacturer in the West Midlands who's making catalytic converters and exhaust systems and supplying them into the automotive sector, you're going to have to make change because you won't have a market here in the UK for your product. So what we need to think is, okay, well, what happens to those companies? What happens to those jobs? What's the risk profile of them? And how do we move that through? So, and the final example on this, which I think is really kind of illustrative of the way in which finance is moving into climate, is, and I saw this article in Politico, was a power station, a coal-fired power station, which had been funded and was being built in Poland. And before they'd finished building it, they've now started decommissioning it because the finances don't work, they don't add up. So the costs of operating from a high carbon price, nobody wants to actually kind of continue to finance that project. And so they're now decommissioning it before they've even made any money. So this is moving forward at a pace, and companies need to kind of understand it.
Yes, I mean, it's interesting you saying that, because obviously we need companies, we need investors, we need people that will take a leap of faith and will invest in something for the next 10, 20 years. We've always needed that to keep our countries, to keep everything going. And yet, like you say, with the pace that things are moving now, they could be out of date before they're even, like you say, reach the market, really. And also, it's interesting when you were talking about investment and how it's moving and how it was the fastest moving sector during the last sort of year or so. Because I think in the main, if we look at financing new products, we look at an industry that likes to favour low risk as much as possible. And yet when I see these different technologies coming on board, I think, well, that's a very new thing that you'd have to go to your bank or go to your finance, and actually ask to fund. And yet they don't really understand that's completely new technology. So, so I guess my question would be, are these industries keeping a pace? Are they keeping up to date with what's happening out there?
Yeah, I mean, certainly I think so. I mean, the risk profile of investment and the way in which sustainability will impact on that, is clearly interesting. I mean, not all investors are looking for low risk investments. So venture capitalists are looking for, high risk, high reward, and sometimes you might need elements of that in opening up new avenues of business and technology. So, for example, a few years ago, I was involved in looking at the risks, supply chain risks around financing some of the key materials and minerals that are needed to drive, towards a sustainable future. So if you look at something like cobalt, for example, mined in the Democratic Republic of Congo, lots of small artisan mines, many will have really, really poor practices. But if we're looking at the transition to a net zero future and the reliance that we might have on cobalt, then what you want is security of supply chain. And therefore, you might need to invest in new mining technologies and new mines in places which are maybe considered high risk. So what you might need there is a combination of venture capital investment aligned with maybe government support through international development, to create a secure supply chain that's reliable, that can scale up, to provide a key material into something that will become mainstream and is becoming mainstream as we move forward, and therefore you can manage that risk profile. So I think that there's that. The other one is that there are standards out there that help to be able to verify the effectiveness and reliability of new technologies. So there is an ISO standard that was developed on environmental technology verification, which was particularly kind of developed to, and this was something that started off in the EU, but also Canada and North America had an interest in this, and so it went into an ISO standard. And it was very much about how do you take the new technologies and provide maybe a way of being able to demonstrate to the market that these are sufficiently mature that they're investable even though they're new. And so there are those things that are helping to de-risk investment, or provide some sort of certainty about the performance of a new technology in practice in the market. And then obviously kind of there's the risk about entering new markets and all the rest of it, and creating markets, but that's kind of a slightly separate issue than the technologies themselves. So I think there are things out there which are helping to kind of move things forward.
Yes, we have to be grateful that all of this is going on behind the scenes on our behalf, that's for sure. So IEMA itself, are you being called upon by the big finance companies to help them and to work with them in this particular sector? Or have you actively gone out to try to educate them, or is it a bit of both?
It's a bit of both, and we've been involved in the development of, at a national level here in the UK, with the development of sustainable finance standards. So government produced its green finance strategy a couple of years ago now, and within that and within the clean growth strategy was the recognition that actually we need to kind of have some standards for sustainable finance. So some standards have been developed in the UK, which IEMA was involved in, and we're part of the strategic advisory group, along with government and those from the financial services community and investment community, which have been developing those standards and that portfolio. So that's really good to see, because that's bringing together sustainability professionals and finance professionals and government to develop this framework and this architecture. And then secondly, we have this link into ISO, which also has a sustainable finance technical committee now, which is also doing the same. So we're actively involved in that. We've also provided, we worked on a joint publication with the Institute and Faculty of Actuaries around how to use financial, climate-related financial disclosures. So, and what an actuary and investors might expect to see from companies, and the questions that they might want to ask. So to bridge that potential gap in a practical way, to say, look, if the investment community wants to have a conversation with a company about how well it's doing and what its plans are and what the potential risks are, here's a framework and here are a set of questions and guidance to guide particularly the finance community through that. And obviously then from an IEMA perspective, it's important that our members are then able to engage in those conversations, and also to engage internally with their finance director and finance teams, because that's where kind of that dialogue needs to occur. So yeah, so we definitely see this as being really important, and ultimately if we can shape the way in which capital is deployed to being aligned to a sustainable future, that's really positive. I did pick up a stat actually recently, which suggested there are something like 400 trillion of assets kind of under management on a global basis in US dollars, and something like a quarter to a third are now looking at sustainability and climate within them. So So yeah, so the scale of this is developing and is really important.
We do love a stat on this podcast, especially when they sound like that, Martin. So could you then summarise for us really what's coming down the track, and also how it will be legislated?
Yeah, the big thing in terms of legislation, I think, is really around the way in which climate-related financial disclosures are going to be mandated through probably changes to the Companies Act. And government has started to consult on that now. And over the next few years, we would expect all large companies, including private listed firms, to have to disclose their climate and environmental risks, which might have an impact on either the asset value of the business, on the profitability, and on the finance flows within a firm in terms of income statement. So I think that is the number one change that is coming through, which companies up and down the country are going to have to understand, how do I do that in a way which, we have an understanding of what those risks are internally. We have internal governance around this. It needs to go up to the board. It needs to involve the finance team. It needs to involve sustainability professionals, identifying what the long-term risks are from a combination of policy changes, technological changes, market changes, etc. And then also physical climate risk. Are we in areas which are more prone to flooding, or if we have a business which, food and drink businesses, very much dependent on kind of weather patterns often, in terms of their ability to access certain commodities. So all of that, building that into the way in which companies are managing those risks, and then reporting those into the people who are investing and financing those firms. And then secondly will be around how those finance firms and investors aggregate that up to be able to demonstrate to the Financial Conduct Authority and the Bank of England that they're managing those risks effectively, and that we don't have a big systemic challenge which, if it all went wrong, you would crystallize into a run on the finance system. And that's kind of those are the big things that I think that are driving this at the moment.
The 2015 update for ISO 14001, they highlighted the fact that companies might employ sustainability environmental management professionals, or they might not be big enough to do that. But really it is the leadership that needs to be educated, that needs to understand this. And so really they were saying that please don't rely on your teams, you have to know this stuff yourself. And obviously these are the people that we're calling upon to understand why they need to take these financial risks, why they need to make that investment. So does IEMA offer specific trainings that would help to highlight, why they need to be looking at this, and specifically at that high level?
And it's really interesting. I mean, working with some of our corporate partners, I've been speaking to boards, including non-execs, of some of those corporate partners on this very subject. So we know that it's that they're taking more of an interest into understanding, what implications this might have for their organization, and how they need to organize themselves, and what skills and capabilities they need to be able to kind of manage this effectively. So there is training and support that's available at that high level. And it really is, what are the risks, but also what are the opportunities? I mean, I think, the big thing here is that there's a massive opportunity with a growing interest in climate change and environment from consumers, and a growing awareness of this in consumers means that the opportunities in the markets for your products and services will be shaped by this going forward. And therefore it's what's the business case in terms of the investments that you might need, but also what are the new opportunities that are being afforded as the whole population, and particularly younger people, are having much more about environment and climate through the education system. And as those people become voters, they become active consumers, therefore it starts to be, the choices that they make. So I think there's a lot going there, and certainly, bringing those leadership people up to speed is really important, because increasingly, as I say, the people who are financing those businesses are going to be asking questions about what are you doing, and what are the risks, and how are you managing them, and what are the opportunities, and what will they be? And if you haven't got the answers, then access to capital will be more difficult, and access to capital might be more expensive. So and insurance premiums might be higher, etc., etc. So I think it's recognizing that this just has to be part of the way in which you do business, and moving through this transition.
Yeah, one of the aims that we have when we started this series of podcasts was to help professionals to understand different things that are going on in the sector themselves, yes, but also so that they had something physical to show their procurement, their buying team, why they need to make this investment. Because a lot of these decisions live or die by whether they get past the buyer, the procurement people. And if they don't understand quite why they need to make that investment when they're being called upon to spend the money on a lot of other things. So we're using, people actively looking for training, people that are in that sort of sector, procurement, buying professionals.
Yeah, definitely. I mean, we're definitely seeing that firstly, sustainability is being written into procurement standards, and that's just not just within companies, but also well, a week ago, government announced that it's changing its public procurement guidance on is it going to be recruiting, procuring from companies that don't have a net zero plan and can demonstrate their climate change performance. So that's, new Cabinet Office guidance on public procurement is pushing that net zero trajectory into government buying, and big projects as well. So I think this is definitely coming, and really it is about how do you equip procurers to be able to understand the questions that they need to ask of those who are providing services back to them. I mean, what I have seen in government as well, in DEFRA in this context, which is really interesting, is and this was on technology. So they've been working with their technology partners, and one of the things they've been asking is, what's the carbon intensity of the service that you're providing us? And a lot of the companies initially were pointing to their annual climate change, reports that have their total carbon footprint in, and they said, well, actually, we want to know the carbon intensity of the products and services that we're procuring, and we want to see how that's going to improve. So I think there's a lot happening in terms of those procurement relationships which are driving on climate change. And I think that intelligent customer, about understanding where you need to be as an organization, how you can help your supply chain to move in that direction, reflecting it in buying standards, and therefore in the capability of your procurement teams, absolutely critical.
It's always lovely having a conversation with you, Martin, because you're always uplifting as to finding out exactly what is happening out there and the positivity of what's happening out there and how fast it's moving. I always learn a lot from these conversations, I have to say. So I think, sort of building a picture really that as much as businesses are going to financial institutions to move their sustainability projects forward, it really is the financial sector that is also sort of going to businesses and suggesting to them, look, this is what you could be doing. They're helping to train them. I know particularly one bank I dealt with a few years ago that was going out and really helping to educate businesses on the need for energy management and what they could do about that, which did really fire up a lot of sustainability strategies within organisations that didn't exist before.
I think it has to be push and pull. We need companies to be recognizing that these investments are important and they're part of their net zero future, and then being able to survive and thrive as we go through this low carbon transition. And we also need to be looking to the finance system and investors and lenders to be asking the intelligent questions and to be providing support so that we do finance this transition as well. Because, you know, ultimately, you know, the public purse has been kind of public finances have been completely ravaged. So it's going to be the private sector that is going to have to finance this transition to, you know, a massive extent. And that's fine. And it's just making sure that we connect all of this together so that companies can understand what they need to do and how they're going to do it, and that the finance system can provide access to investment and capital to enable that to happen.
Yes, I think our traditional lenders, I would imagine, like you say, the larger organisations that, you know, have very aggressive strategies will know what these financial institutions are offering them. I think I'd like to see a bit more marketing around what they can offer and how they're driving this for SMEs, probably, if you like, and maybe even in the media, you know, on TV, even if they could just let people know what's happening. So that's like the traditional institutions. But what about a specialist lender landscape? Is there a specialist out there, and what does that look like in 2021?
There are, I mean, there's a combination of lenders and investors, aren't there? And in terms of lenders, you know, we know that there are, you know, I call them boutique, but maybe not, but have a really kind of deep understanding of sustainability. And, you know, they are really kind of well in tune with their investment portfolios. They are really kind of making those decisions there. I think in terms of specialist lenders, I guess the question is, how much do you need a specialist lender, and what, and if we can make this mainstream, then that's where we need to be. I mean, I think, to my mind, absolutely we need to find ways of being able to support small businesses on this journey. We've been doing some work on some early work on the development of an SME zero carbon business hub. And one of the things we've been doing is speaking to the finance community and banking sector about, you know, how are they going to be able to support small businesses on this journey? Because what we don't want is small businesses to be left behind. That's absolutely crucial. Secondly, we want them to understand what are sensible projects to invest, or activities and investments in their own businesses to make, which could help to accelerate their business development in a net zero way, and make sure that that kind of finance flows in. So we are looking at that, you know, and hopefully in the not too distant future we'll have kind of something to be able to discuss on that.
Yes, and I think when you covered SMEs, I did have that conversation with you, Martin, that I know the big sustainability expo that's in Southampton has made a point over the last sort of 4 years or 5 years of trying to invite accountancy firms, and by that I would say the small to medium sized accountancy firms, because obviously we know that the larger ones are very involved in the sustainability strategies of their clients. But we didn't really have any luck with you know, getting them to come along, and that's not to say because they didn't go there that they're not doing anything, but having conversations with some of these organisations as well, and our own accountant, you know, there didn't seem to be that conversation really being had, and I think that they need to you know, upskill really to learn a lot more about this so that they can help their customers, and especially our SMEs, to understand the importance of this. And so I'm wondering really, with the incredible skill sets that there are out there, of maybe you know, a professional that's taken a reasonable organization through its sustainable journey, you know, maybe these are the types of people that they should be employing. And, you know, maybe also banks as well, and maybe they are, but I think, you know, these people can talk the language of the very companies that they're trying to, you know, do business with or get new business from.
Yeah, definitely. I mean, we are seeing a lot more interest in from the financial services community around. I mean, they talk less about sustainability. They talk about ESG, so environment, social governance. So so we have this kind of slightly different language, but kind of generally meaning the same thing. And so there are, programs of um, training and support which the financial services community are running to enhance their skills. And certainly, the accountancy profession as well has that woven in. So I think that that's starting to happen. I think it's one thing is giving people the training. The other bit is how do they apply what they've learned in the discussions and decisions that are being made with respect to companies. So I think there's a bit further to go. Certainly at the top end of the largest businesses where some of the legislation is most obvious in terms of corporate reporting and accountability and accounting for climate, etc., then there's kind of a lot more awareness, but inevitably that moves its way down into smaller companies and medium-sized companies and into the financial support that they get, simply because a lot of them are supplying into bigger companies, and bigger companies are starting to ask the questions of their supply chain, and therefore they want a supply chain that's on a net zero journey too. So I think this will come. It's probably just lags a little bit behind some of the leading developments. So hopefully we'll see more at the big sustainability expo either this year, or if not this year, then definitely next year.
Well, that's good to know. And I would say that maybe if there are any small accountancy firms that are watching this or listening to this podcast right now, maybe the first thing to do is to tell your clients to become a member of IEMA. That would be maybe a really good place to start.
Perfect.
I would like to just touch on something that worked, I think, really well, and maybe it's completely unique to this industry, but I spent a few years in the renewable energy sector, and I know that there were financiers that would say, that we will actually invest our money into putting, and I mean, this could have been a whole field, a whole solar farm, as we call them, in. Maybe we do it at a reduced cost, or we put it in completely free of charge, because then that's going to generate electricity that can be sold on. And so how the organization who are going to end up with that solar farm free of charge with the installation would then pay for that in the energy that it generated, until such time as we reached, everybody was happy with what the outcome of that was. And I thought that was a really interesting concept. And as I say, it might just simply be unique to that. I don't know of any other industry sectors that it could work, but I think at the time, and it's probably still happening, was a good way of moving the renewables side of it forward.
Yeah, I think what's going to be really interesting is how we are going to retrofit existing homes, and both the costs of doing that and therefore the financial products that are going to be needed to support it as well, whether that's a blend of public and private sector finance, I don't know. But clearly, one is, how do we ensure that all homes in the UK are going to be powered by renewable energy in the future, or kind of zero carbon energy? And secondly, how do we, as part of doing that, we also want them to be as efficient as possible as well. So I think there are opportunities as this whole agenda is moving forward at pace, is that there are opportunities for new finance products to be able to finance the transition in ways that potentially are going to be more innovative. I think what's absolutely crucial is that those have to be really well understood by those who are using those products, so that we don't end up with creating the unintended consequences, or intended consequences. But actually we are very, very clear about what the benefits of these new forms of financial products might be. So I think, eyes wide open, and definitely there is, I would think that there's always, at a time of change, there's always an opportunity for innovation and doing things differently, and that will apply to financing as well as, you know, the technologies that are being deployed.
Yeah, so one thing that we've seen in so many different sectors and so many different ways over many years is that people who invest will come up with some very smart ways in which they can do so and push things forward. So, lastly, Martin, I'd like to ask you, shake things up a bit really. Um, can we foresee a time when the ability of a business to finance sustainability strategies or really finance anything that they want to do in their business will depend on their ability to mitigate the effects of climate change on their business?
Definitely, and I think you will see that in the next few years. So this is moving so quickly, and that, you know, lenders are, you know, if they see that companies that are you know, on this journey, understanding climate and environmental risks and opportunities, it's almost as well, not, you know, those are important in their own right, but it's also a proxy for well-run businesses. And therefore, you know, where do financiers want to invest? Who's most likely to get their projects, project finance in from lenders? Actually, it's the, you know, the best run companies. And so those companies that understand that, you know, their contribution to a net zero future and living within, you know, one planet and all the rest of it, it is going to be where things are at. So my view is that this is, you know, there is legislation on the way anyway. Government seems to be very, very clear about UK leadership in this space. So I would say that this is going to come a lot quicker than other people might imagine. And I think that's a good thing.
Yes, absolutely. And I think businesses that maybe are SMEs on the smaller side, you know, if you're listening to this and it may sound daunting and you may have got a picture here that things are moving very much faster now, I think suffice to say that, you know, it's to start somewhere and there is help out there, and it's just taking one project, one thing at a time, but it is about starting somewhere and getting started, because as you can see from what Martin is explaining, you know, this is coming down the track at you no matter if you are a small business. And to be honest, the benefits of running a more responsible business are manifold. And it's, you know, I think from what we see, it helps improve processes, it helps reduce costs, it helps manage, you know, costs. It's great for the people that work for you, the perception of your business. I mean, I don't really think there are any downsides really. And of course, the ultimate gain is that we all need to do something to reduce our impact on our environment and also on our communities. So Martin, thank you so much again for joining us. You know, again, it's been uplifting, as I say, to find out just what is happening out there. And we always learn a lot from you. So thank you.
My pleasure. Look forward to next time.
Yeah, absolutely. And as always, we will have a link to the IEMA website for you to check out all the things that they offer. And there is a vast array of help for any type of business. Training, etc. So please do check on that. Again, you can meet Martin in person at the Big Sustainability Expo, where he will once again be a keynote presenter. And in the meantime, thank you very much for watching. Thank you very much for listening, and we'll see you in the next one.